Hey guys, I'm back as requested
Nadia, don't.
by literally everyone in the comment section. Today I guess we're doing another video about the stock market. So I'll let Elijah take the show from here.
Thank you. Thank you very much.
Welcome.
So today I want to talk about our portfolio performance compared to the SP 500. So we actually outperformed SP by about almost like 1.5%, and SP 500 is hard to beat. So um, our portfolio was up a little over 7% compared to the SP 500's 5.45%. So that's not bad at all. We'll see how this continues to play out over the long term, but update on our newest holding. We got Shopify here. We have about. What are you laughing at?
I'm not laughing.
What's so funny?
Okay.
Yeah, be quiet. Um, so we got. So we got. How many shares do we have here? I'm getting distracted. A little over 6 shares. So I want to build this out to at least 10 shares under $60 would be preferred. Our average cost right now is $58.50. So we're gonna continue building that out. Also want to throw some more money in Meta. What's Meta at right now? I had a red day today, so down over 1.5%. So pretty red day for Meta. Let's see. It had a big rebound after that crash for earnings, which is kind of expected. It has a low forward PE ratio, so everybody's buying it up. But if it could pull back maybe to the 450 range, that'd be nice. Add more there because it's still a relatively small part of our portfolio. I mean, relative to everything else, it's only 8%. So some other stocks I want to buy that I talked about in the last video a little bit. If I want to go a little more in depth, let's go down to our watch list. Palantir, we talked about it last video a little bit, but stock's very expensive right now. And there's a lot of hype around it in the retail space. So you got to be careful with stuff like this because it gets so hyped up, and the valuation is put on this pedestal, but it's just not cheap whatsoever. It's up 132% this year. Forward PE is crazy high, but there is good growth and there's some AI opportunities here. But I would like to add between the $17 and $19 range, which is going to be hard to get, but it's definitely possible if we continue this downward trend. Adobe is next. Talked about that last video as well. All of these we talked about last video, but where's Adobe at? So Adobe has pretty good recurring revenue, and it has a big position in the AI space with its AI Photoshop and everything like that. Pretty slept on in my opinion, but it's trading in the 2021 2020 levels, which is pretty crazy, and its revenue is much higher than it was back then. They've also announced a lot of buybacks and stuff. I'm actually surprised this doesn't pay a dividend. I would not be surprised to see Adobe pay a dividend in the future. So next up, Snowflake. Let's go to Snowflake. Snowflake, I'm pretty sour that I didn't get to add under 150. Because that was my target this whole time, and I got under 150 very briefly. And I didn't add any shares, but it's only under 150 for about 1, 2, 3, like a week. I don't see it going back below 150, unfortunately, because it has really strong support in these levels. But if it can maybe go back down to this high 150 level, that'd be nice. Maybe I'll pick up a few shares there. But we're definitely taking a little more risk, definitely taking a little more higher growth approach. But it's been working out so far. But year to date, what are we? We're up a little over $1,000, which is crazy. Almost at the $15,000 mark. That's going to be very, very exciting. So, yeah, me and Nadia are very excited over here.
So excited.
So we're just going to keep things rolling. I wouldn't be surprised to see a pullback soon. I mean, they get the market at all-time highs, so that's always very scary. But thank you guys for watching, and I will catch you guys in the next video. Say goodbye, Nadia.
Bye, guys.